Welcome back, guys, to Real Estate Talk from a private lender's perspective. I'm Anitra Preston.
And I'm Elridge Moore.
And we're introducing a new segment today, guys, where we respond to comments in a video segment.
Today's comment is from Robert, and he wanted us to talk about different investments a person can do. And as you can see below his comment. And we wanted to share with you guys all of the different investment strategies we do here at Vertical Capital. So we have 4 different investment strategies. One, as you guys know, notes, right? Second, real estate. Third, peer-to-peer lending. And 4, stocks. Anitra is going to dive deep into notes and real estate, and I'm going to dive more into the Prosper, peer-to-peer lending, and stocks.
So, of course, you know, our bread and butter is notes, right? We're a private hard money lender company here in the New Orleans market, and we originate our own notes. And how do we do that? One, we market to fix and flippers, buy and hold investors that we are lending money. I mean, it's really simple as that. And then once we get those buyers into our application process, we basically create a mortgage based on the numbers. Of course, they have to be great numbers. We create a mortgage, and then where those people pay us a monthly interest payment. And so we collect this monthly interest payment every month. And the note, of course, is backed by real estate. The other one that we do is real estate.
Yep.
Traditional, we're investors first. So traditional fix and flips. We don't do any more rentals. We're tapering off on the rentals. But for us right now, just fix and flip. And that's just kind of more of a transactional business or whatnot. Of course, you buy the property in a great area, you add value to it, and then you sell it in the future and cash out.
I want you to touch more on the real estate aspect, because right now we are experiencing higher interest rates, and dive deep into our strategy on how we get to sell our properties faster in a market where they have less buyers with the interest rates being so high.
Elridge, I think that's simple, man. You just got to buy lower.
Buy lower and...
You got to buy lower, and we are strategic about our areas. I mean, before in the New Orleans market, a lot of the zip codes were just wide open, right? Now that our parish is Orleans Parish, the main parish here in the New Orleans market is having an influx right now. We have these Airbnbs that are coming on market. So we're now going to our out surrounding or our suburban parishes where there's still good stock and there's still great demand in those areas. To
piggyback off of what you're saying, another way we sell our properties where they have less buyers buying in the neighborhood is that we position the listing price a little under market.
Yes, we always go. So for me, I'm a realtor. So for me, the most important number to me is not necessarily that the sale number, that whole number. Say, for instance, that we were talking about a $500,000 property. I'm looking at the dollars per square foot. And I want to know if my dollars per square foot is in line in that particular neighborhood, and particularly that particular street. Mm-hmm. Right. And then so what I've done in the past and what I've always done is I make sure my dollars per square foot is lower than the dollars per square foot in that surrounds my house. Right. And the reason why is because, one, I know that there's buyers in that particular neighborhood. Right. Mm-hmm. So if I position my property to appear to be lower on the dollars per square foot, I tend to get more active interest, more active buyers. And typically what's going to happen is the market's going to pay for the property anyway, right? So normally sometimes what happens is I still am able to create somewhat of a smaller bidding war, if you will. But at the end of the day, it's the buyers are going to bid up the property. And of course, it should appraise for what we go under contract for.
And that's a great point. And to give you guys an example, we're working on a flip right now where it was appraised at $330, and we're going to come in and list it at what you think?
We're probably going to come in at about $320.
$320. So
somewhere around that, $319 maybe.
Yeah. So that's a $10,000 haircut, really. So at Vertical Capital, we big on velocity. And as you can see, the shirt, velocity is important. It's not about making $100,000 in 12 months. We want to make $50,000 in 3 months because we can reuse that money over and over.
And the other thing on my shirt is compounding, right? Compounding interest. Somewhere on there in the middle is compounding. So Like you said, once we take those profits from our fix and flips and some of our other strategies, we put that back into vertical capital. Where now that extra money that we made on the fix and flip, now that's going into a loan or a note, and now that is going to make interest on it in a short amount of time.
Exactly. So most of our investments go back into notes. We went over notes, we went over real estate, and now I'm going to share my screen so we could go over the peer-to-peer lending in the stocks. So I have M1 pulled up right here, and this is just a brokerage where you can invest in the stock market. Anitra and I love M1 because we have the ability to borrow. So we're not educators on the stock market or anything like that. So we keep our investments really, really simple and invest in index funds. And that's all we invest in the stock market. But what we love about it is the ability to borrow. So with M1, if you read right here, you could borrow up to 40% of the account value. And that's really key to us because most of our different investment strategies point back to notes.
Right.
Point back to notes.
Right.
Because that's the number one thing for us. Mm-hmm. So if we could borrow, let's just say if we put $1 million into this portfolio, right? We could borrow 40% as low as 7.2%. And we can make a spread through our company, right? So if we could borrow $1 million, that's $400,000 we could borrow at 7%. And our interest rates are a little higher than 7%, right?
Our interest rates go anywhere from 13 to 14%. So what he's talking about here is the arbitrage, right? So although we borrow the money at a 7% interest rate, we're making an arbitrage because now we're loaning that same dollar out we borrowed it at 7. We're lending out to someone else at 14%. So of course, there's enough room and enough spread to make a profit as well.
Exactly. So we love M1. M1 is the brokerage we use just because the ability to borrow from it and invest it back into
notes.
Yeah. So, and then we also love Prosper. Prosper is a peer-to-peer lending account that we have. And we love Prosper because it produces a 3% loan constant. And what a loan constant is, if I could remember the definition, is pretty much whatever your investment is going to pay you 3% monthly. So what Prosper is pay you principal and interest at a 3% loan constant. And that focuses on the velocity. And actually, Prosper is probably our biggest investment that produces the highest loan constant. And let me give you an example. If you got a $100,000 investment and you invest $100,000 into Prosper and peer-to-peer lending, and you get a 3% loan constant, that's $3,000 a month coming in. And what we are big on is velocity.
Velocity.
Right? So if that 3% coming in every single month, we get a chance to reinvest that money back into
notes.
So that's our 4 investments we do at Vertical Capital. It's notes, real estate, Prosper, and M1.
Now, I want to add to that. All of these are not without risk, right? There's risk in every investment strategy, but if I had to say one of them was one of the safest, I would probably have to say the last 2, right? Prosper and M1?
Well, as far as safety,
less risk. Riskless.
As far as safety, I feel like, if you educate yourself behind each of these investments, the risks go down. In my opinion, I feel like the less risky is the notes, in my opinion.
Okay. Well, Prosper is when you're doing peer-to-peer lending, you're investing in notes as well.
Yeah.
It's just that you're doing it on a platform versus when we create the actual mortgage. For those who are not as ambitious to go out and create notes, you have the alternative to go to Prosper, where everything's already set up for you. You actually get to choose your investment there.
Yep.
So that's why I say for someone who's not active or you just have this extra funds that you want to put on. And then look, you don't have to have $100K in Prosper, right? Prosper has any dollar amount, right? If you have $5,000, I don't know what 3%, what's 3% of 5?
3% of 5,000, I'll pull out my calculator. 3% of 5,000 is $150, and that's $150 coming in every single month.
Yeah, and so you get to also choose, you get to jump into the lending length of those particular loans, right? If you do initial $5,000 today and you get in a 36-month loan that's paying you $150, how much is that?
Say that again?
I said 36 months.
36 months paying you $150 times 36 months is $5,400.
So in about, it's probably not, it's a slower growth, but in this case, you did make $400. It might not be that much to some of you more aggressive investors. But if you were just someone that just have, again, I don't believe in having cash sitting in the bank. It just doesn't make sense. You're losing by having that $5,000 anyway. You may as well put it in something.
To touch on what you said, with that money coming in every single month, one of the things that we do with Vertical Capital is yield stack. So, and I don't want to go and dive too deep into what yield stacking is, but it's pretty much you using the money from one investment to invest in another. So how we use M1 to invest in stocks, and we could borrow against our portfolio and invest that into notes, that's yield stacking. So we get one yield investing in the stock market, right? And we get another yield from that same dollar investing into notes. And that's yield stacking.
But one other caveat, we're not promoting Prosper. We're not promoting M1. This is not a paid advertisement. We're not getting paid for this. This is just what we generally do. And again, one of our goals on the channel is to just be transparent and offer, now I don't want to say advice because that's illegally, I don't want to do that, but just offer some insight on what we're doing, right?
Yep, definitely. So Robert, this is a segment to replying in video form to the comments below. So we encourage you guys to comment below because your comment may get picked for us to reply in a video form. So shout out to Robert for engaging with us, and hope you guys comment and we are replying in video form.
Absolutely. So again, this is Anitra Preston with Real Estate Talk from a lender's perspective.
And I'm Elridge Moore. See you at the next video.